You're listening to Strictly Business Podcast with Lindsay Williams.
The JSE has closed its doors for the first day of a new trading week, so it's time for the 5 o'clock shadow. And with me tonight is Nick Kunze from Sanlam Private Wealth in Johannesburg. And Nick, September year-end companies and September half-year-end companies are coming out with their numbers, some of which we'll speak about in a moment. Developments to the US Federal Reserve with Mr. Biden renominating Jay Powell for another term, the dollar going through the roof, the gold price coming down, the rand getting clobbered into the 1580s, and other things as well. So much going on. Your screens must be flashing maniacally.
Yeah, afternoon, Lindsay. You're entirely right. I've spent the last hour or two just prepping and trying to understand what's going on, because there's so many things, as you said, happening at the moment, from yields and cryptos and Fed chairs and vice chairs and Ukraine and coronavirus and escalations and trying to put those all into sort of a credible, trying to just sort of join the dots or figure out the puzzle of where things are going. And I'm actually none the wiser, but as you said, it's a lot going on. I thought we'd be slowing down a little bit going into year end, but it doesn't look that way at the moment.
No, really not. There's another week or 10 days of this, I think, I mean, from a South African perspective, but I do believe it won't be the normal December. I've just got a feeling it won't be the normal December that we're used to. In other words, the feel-good factor. I think there might be something different this year, but that's me as a broadcaster.
No, I agree. I totally agree with you. I think certainly now you start hearing things about lockdowns in Europe and Christmas markets cancelled, and it's like been 2 years of this when people need a break. Everyone's looking forward to a Christmas, and if the governments are starting to cancel Christmas now again, the escalations are slowly sort of peaking up a little bit here down in South Africa as well. We work 11 months down here. The 1 month from the 15th
as many months as that. Are you sure?
Yeah, to the first or second week in January. Like if they decide to sort of introduce lockdowns again this year around, I think it's going to be actually anarchy. So I think you're right. December is not going to be a quiet December this year.
It's not going to be. And just on the European situation, as you know, I'm based in the Netherlands, and I used to live in Rotterdam up until 6 months ago. And Rotterdam's a feisty sort of port town. They started it all off, and the violence was quite unpleasant, actually. But I've got my own views on that, which is not for this show. But I do believe that the lockdown happening now, where are we? Fourth week of November is probably a good preemptive strike, because if things work out and the infection rates come down, then they'll open up for Christmas and make everybody happy again. So I think they've done the right thing in Austria, potentially in Germany, certainly in the Netherlands. I mean, we've got 3 weeks of this, and it's not a full lockdown; it's a half lockdown. So I think they've handled it right. What hasn't been handled correctly is the hooligan element, and it is a hooligan element, but it'll pass. It's just a few youngsters in black hoodies just being naughty, in my opinion. But it doesn't bode well for markets, although markets have shrugged it off, because here we are with new record highs in the United States. Europe, not so. Just tell us a little bit about the backdrop to our conversation, please.
Yeah, it's a bit of a split market. I mean, it's a tale of very two markets. So on the one side, you've got 36 minutes ago, Wall Street opened up. The Dow Jones, a little bit of a lag, but the S&P 500, new all-time high. NASDAQ, new all-time high. S&P 500 Tech Index, new all-time high, and so on, go on. Really is just on the power on the back of it. And difficult to see what, actually. As I said, we had a new appointment, basically we had a reaffirmation that Mr. Jay Powell was going to continue going. So Mr. Biden going with the continuity, which has been the norm for centuries. It was only Donald Trump that decided to put his person in. But in effect, history they always want to show continuity to the market. So Jay Powell's staying, which I guess is a little bit bullish. And then he's got a new vice chair, which is that lady, Bail. And she apparently is also very, very uber dovish. So you got a double doves there in the Fed, right. And then the yield frontier, the yield curve spiking quite a bit, which doesn't make any sense to me. But looking across to Europe is a very different story. European stocks all down. I mean, they're the second day down. They were lower on Friday while Wall Street was higher. Not massively down. A couple of pips here and there, but across the board, just softer. And this is on the back of, as you said, protests breaking out in Austria, Italy, Belgium, part of the world as well. They also seemed very unhappy. Across in London, the FTSE, that was down quite solidly 0.5%. Mining stocks taking a knock with that stronger dollar. Asian markets this morning also down. So just so much to sort of try to figure out. And then throw in the fact that Brent's down as well, 0.7%, now coming below $78 a barrel. There's a lot of moving parts, and not sure how it'll mixes up, if you know what I mean, Lindsay, between sort of the Northern Hemisphere and Europe and America and what's happening in the Far East. And emerging markets also under pressure, quite a bit of selling pressure, as it seems to be a lot of money seems to be moving back now towards developing economies, where I think interest rates are probably going to rise a little bit over the next few years.
Okay, well, let's eat this elephant of a Monday one bite at a time and start with the Stock Exchange News Service and start with Process and Naspers. I spoke to David Shapiro about it. He's always been very cautious about this one, and when he sees the operational losses that have been announced today, despite the fact that they made profits, operational losses were of a concern to him. What do you make of it, or them?
Yeah, I agree with David. E-commerce revenue is up, I think, 53%, I think. But the operating loss in that segment increased. So overall, we know what these SENS announcements are like, and these companies tend to sort of skew things in their favor. But if you had to not cherry pick these different the positives and leave out the negatives, revenue is only really up like 2% in that sector if you take in operational losses. Yeah. So the one encouraging thing I will say though, and we do hold the share on Process and on Naspers, but the one thing I will say is that the sort of reliance on Tencent making up that massive part of the rump now seems to have fallen back a little bit even more. I think it was closer to 80 or even under 80 now. So there seems to be, the market seems to be putting a little bit more value on the unlisted entities, which I think is good, which I do think is good. But overall, I'm also the same. I'll be in David's camp here. I'm a little bit cautious. And I think if you look at what the share prices have done today as well, the market's also a little bit on that cautious side too, and not to mention the fact, Lindsay, we had more regulation coming across over the weekend from China yesterday. Yes. And Alibaba shares down. I think they were down about 10% on Friday as well. Gosh. So that whole Chinese tech space still hasn't found much of a bottom just yet, and you can see that in the prices today.
Okay, let's look at more South Africa-centric stocks now. Netcare, Barloworld, Omnia, and also a little bit of announcement from Billiton now, the BHP Group, of course. But Netcare, Barloworld, Omnia, any of those of interest to you?
Yeah, let's talk about Barloworld. Really nice set of numbers, and I'm sure a lot of a stalwart of a lot of South African portfolios has been around for yonks. But really, really nice set of numbers, and a special divvy. Just to throw in the fact, R11.50 per share. That's on top of an ordinary dividend of R3 per share. So nice. Really, really cash flow positive. Bearing in mind a year ago there was no dividend. So lovely shareholder, looking after the shareholders, cash flow positive, getting through the worst of it. And the first thing they actually did was to declare a nice chunky special divvy. So this is the reason why you hold shares as shareholders. Earnings per share, HEPS, which we use here in South Africa, which includes those off items, R11.95 versus a loss of R2.86. I just think they seem to be like a really nice place. And if you remember a little while ago, they acquired that starch business from Tongaat Hewlett, yes, which has been rebranded Ingrain, which whatever that means, but anyway, which also seems to be going quite nicely as well. So really, here's a business that is gone. Looks like it's got through the worst of it. They're stepping up a little bit and they're getting back to their basics and they're giving money back to shareholders. And on the back of that, the top of my leaderboard, which we'll hear at the end of the session, but up 7.33% today. So just overall, just a solid set of numbers. Got no complaints as a shareholder there. It
was almost 10% higher at one stage. What I like about what you've just said is that there was no dividend at this time last year because they said, we don't know what's going to be the fallout from this pandemic, this global health crisis. So we'll just be prudent and just hold things back, although we possibly could have paid a dividend this time last year, but we will reward people when things open up a bit, and that's what they've done, which is a lovely surprise. So I think experience and prudent management, Nick.
Definitely so, and definitely just overall, just a nicely, as I said, nicely run business, and classic case of preserving a little capital in the C-suite, not being so aggressive, but then as soon as they came back up and running and they're back to not quite pre-COVID, but certainly close, the first thing they did is reinstall those dividends. But good set. Omnia, you want to talk about Omnia? It was just a good
Yes,
set
please.
of numbers. Yeah, so Omnia, I mean, that's a chemicals group, obviously very exposed to fertilizer as well. I mean, sort of after tax grew to 467 million. That's in the 6 months ended 30th September. That is more than double its profit in the 2020 year. Revenue increasing by 31%, almost 10 billion, 9.9 coming in it, and HEPS up more than 100%. I mean, global supply chain shortages they spoke about in the board in its SENS announcement. What I like also, Lindsay, sitting on quite a nice cash pile, 719 million rand of cash. And bearing in mind, not so long ago, they were sitting in close on almost 2 billion of debt. So completely turned around that business. They had a bit of a help from disposing of a couple of their businesses. I think it was called Ori Agri business. That was last year. They got 2.5 billion, went straight to repaying back their debt. So they also seem to be a little bit prudent in the C-suite and getting their business back online. And Omnia, top 5 leaderboard today as well, up 4.45%.
Just briefly on Netcare, that wasn't quite so well received. Is this one you own?
We do have exposure to it. It is, that was quite disappointing. That whole medical sector is the whole hospitality, the hospital business itself, Netcare, Mediclinic. They're all guarded recently. They're all been quite disappointing, and I think those are almost like a wait and see. They certainly haven't got through the COVID like some of these other businesses have, and I guess you could argue they're on the coal front of it, the coal phase of it. So I think those are ones you got to hold and see, Lindsay. But overall, just frustratingly disappointing. I wouldn't be a seller, but I would say, you need a bit of patience with these ones.
Okay, let's have a look at some spot prices now, because it's been a terribly, terribly interesting start to the new week. Let's start with the currencies. Dollar rand just below the lows of earlier on, which was the mid 1580s, or rather low 1580s. Currently 1579, the dollar rand. The British pound against the rand is 21.17. The euro rand is 17.76. The euro dollar 112.45. A 1.1% move for the dollar against the euro, and this is a big move. I just want to focus on this for a moment. This has gone from what was the peak of the euro? I think it was something like 124, maybe 7, 8, 10 months ago. I can't remember the time frame, but it's got, for that to go from 124 to essentially 112 is huge.
That's a massive move. I mean, I'm just looking at my graphs now. I mean, this has been talk about a trend from one side to the other. I mean, don't fight the trend. This has been very much a one-way train. I'm just trying to find a graph from more further back. You're right. So back at the end of May, early June, this was sitting at where's my graph here? 122.50.
Okay.
So that's 10%. A 10% move in the space of sort of 7 odd months. That's a massive move. 6 months,
And as you have to point out, this, no matter what people say about the renminbi and the reserve currency and Bitcoin and everything, the dollar still is the world's reserve currency. So if the dollar moves by 10, 11, 12%, then every single asset class that you look at every single day on your 17 screens is affected by this, Nick. Everything. From your loaf of bread to your oil price to commodities, precious metals, you name it. Majority of assets around the world are denominated in dollars. So it does affect all of that. And it affects also if you own houses overseas as well, or whatever it is, all your mortgage rates, that yield that moves with the dollar is affected as well. So this is for me the number one barometer of world finance. And to have moves of this scale is quite staggering, actually. Yes, it is. And it also affects things like this stuff that South Africa digs out the ground, not as much as it used to, but the gold price is down $36 an ounce, or nearly 2%, to 18.15, still above 1,800, but nonetheless, a nasty little spanking. Yeah, exactly. Platinum, on the other hand, is barely changed, just slightly weaker at 10.33. Palladium, not so, down $27 an ounce to 2,027. And let's have a look at that oil price. You did just make a brief mention of it in your introduction. I'm just going to get my oilprice.com screen up and refresh it. It suddenly turned around a little bit, Nick. It was mired in the red, and now suddenly it's gone up a bit. Brent crude is up very slightly, but still up 0.13% to $78.99, and West Texas now $76.02 per barrel, up 0.1%. The US 10-year bond yield, everyone watching this one, and it's been creeping up all day. A 3.5% move to, let's call it 1.59. It was 153 this morning. So that is quite a big move. And the South African 10-year obviously going to be, oh, look at that thing. Oh, it's horrible. 9.60% for the South African 10-year. So things going on in the world's capital markets. The Bitcoin price, we have to just talk a little bit about that because it's bounced back a bit, but it's still down 1% on the day. 10,000, almost exactly $10,000 a coin below the highs of 2 weeks ago. 58,244. Interesting start to the week, Nick. I bet you were looking forward to putting your feet up for the next 2 months, which is what you take off, you financial services people, but not a bit of it. You've got to sharpen your pencil for the next few weeks, I reckon.
You know, it's funny. I spent sort of half my trading career, as you know, sort of trading in the northern hemisphere, and December was never really a holiday. You know, you literally work quite comfortably up to Christmas Eve. Usually the LSE was open till lunchtime. Same goes for the NYSE.
Yeah.
And you sort of had that afternoon off, and you came back. And you came back on the Americans are back on the 26th because, of course, Boxing Day was a British tradition. So we got Boxing Day the 26th off, but we were back on the 27th. So, and I must be honest, December's always been a busy month for me when I used to trade over there. You often got unexpected interest rate rises. Things sort of happened. It really was, and I suspect. I had some leave due. I want to have a bit of time off from Christmas to New Year, but I actually was going to book in a week or two before, and I'm not, because I share your sentiment. I think December, I'll wait until next year to take some time, because I think this December is going to be, I don't know, just something tells me we're going to be on the edge of our sort of seats. There's a lot going on at the moment, and I kind of need to be in front of my screen for the time being.
Of course, you're a sick market watcher, and you're devoted to your trade, and well done.
Devoted. You're listening out there, my bosses. Devoted.
Exactly. Nick Kunzer is devoted to his trade and Sun and Private Wealth in equal measure.
So lucky to have me.
Oh, goodness me, if only they knew. The top 5 on the JSE on my screen, which is actually top 4 because Vivo, it's too volatile. Barlow World up 7.5%, off its highs, but still a very good performance because of what we've spoken of earlier, a dividend, special dividend, and a good operating performance. Aspen, we'll talk about that in a second, but anyway, up 5.75%. Investec Limited up 4.25%, and Investec PLC up 4.25% as well. Let's start with Aspen. What on earth happened there? Any news?
No, I'm trying to find out if there's any news on AstraZeneca boosts or something like that, because that's the COVID-19 drug of choice for Aspen, which they manufacture.
Yeah.
And I didn't see anything at all. So I don't know, actually.
Do you think it's just punters saying because of what's happening in Europe at the moment, which again we spoke about earlier on, there is going to be an increased demand for whether it be first or second shots or booster shots? Do you think that might be part of it?
No, I think that's definitely some of it. I mean, don't forget, Lindsay, at one stage it looked like it was going to push through 300, trade as high as 270 or 271.
Yeah.
That was only the end of September. So what is that? Sort of less than 2 months ago. So it's come in close on, it's close up, it was 10 Rand today. But at one point, it was down 60 Rand from its high. It's like almost 30%. So I think there's a little bit of bottom picking coming in here ahead of it, and it's probably not a bad little trade here. Also, Aspen being quite defensive as well.
Okay, Investec, is that a currency factor? As simple as that, 4.25% up for PLC and Limited. Must be the pound, surely.
Yeah, I think it is a bit of the pound, but I also think, and you closer than I am to the group. I also think those earnings were very well received last week. I heard some glowing reports from independent analysts, not just the Sanlam Group, of how well they were doing and the assets under management and how they were pivoting and the amount of business they were getting in from shareholders and the likes of the US were coming in China. So I think a combination of both, a bit of a pound going in their favor. Obviously, financials also like an inflationary environment, but also I said don't just use that as an excuse. Don't underestimate the quality of their earnings last week. I think they were very good.
On the downside, Montauk Renewables bites down 5.3%, DRD Gold down 3.9%, Harmony down 3.7%, obviously, because of the weaker gold price taking precedent over the weakness of the South African rand, and Motus down 3.33%. Anything outside of those stocks that flashed across your screens?
We could cut and paste from what we spoke about on Friday at exactly this segment. Sort of hotel groups, Sogasun Holdings down 5.87%, City Lodge down 3.54% again. More and more as these cases rise and the lockdowns in Europe continue, the opening up trade, certainly what I can see on my screen, is taking a bit of a backseat for now. Bear in mind, something like City Lodge has come from down at R3, it went to almost $6, but it's back at 4.91 now, down another 3.5% today.
Nick, give us the closing JSE indices on this very interesting first day of the new trading week, and also the live Wall Street. Off you go.
I can concur. It's going to be a very interesting week. All shares still closed up nicely, 0.7% today. That's your JSE All Share, following Wall Street and not Europe, up 70,865, and that's despite that weaker dollar in the background that knocked down miners. JSE Top 40 Tradable Index up 0.8%, 64,384. That's 513 points in the green. Led higher by energy, healthcare shares. That'll be Aspen up 2.17%. Industrials had a good day, up 1.72%. Consumer cyclicals up 1.5%. Basic materials 1.41% higher as well, and financials as well. That also, despite that weaker rand, financials had a good day, up 0.93%. And finally, real estate on the upside up 0.69%. On the downside, the laggers, academic and educational services down 0.25%. Tech shares, that'll be a NASPA's process. The heavyweights, disappointing update this morning. That index down 1.52%. Utilities were a 6% loser. Volume traded, that's also another loser. Another day, another 18.2 billion. Another very disappointing day on the volume.
This is a disturbing trend. It's not just a flash in the pan for 1 week. It's been weeks now of this. I think only 2 days above 20 billion in the last month or so, I think. Nick, what about Wall Street?
And that's worse than, if you remember, Lindsay. I'll get onto that now. I was going to say, when you remember when NASPA's in process used to come out with earnings a couple of years ago. I mean, that thing would take up massive volume on the JSE.
Oh, good point.
It shows how much these market darlings are falling out of favour. Anyway, Wall Street, okay, we are sitting exactly on the highs of the session. S&P 500 futures, I'll give you, is at 47.40. That's up almost exactly 1% on the day. It's an all-time high. The NASDAQ also, all-time high, over 1% higher, 16,755. We're only 250 points away from 17,000 on the NASDAQ. It is a new all-time high. The Dow Jones Industrial, though, it is... it's still having a decent day. Not at the highs, though, but it's having a decent day. 0.78% firmer, 35,826. Lindsay, that's it. Pretty strong markets offshore.
Yeah, just looking at the S&P graph, and it almost the spike coincides with the Jay Powell announcement from Mr. Biden. So yeah, interest rates and liquidity. They love liquidity. They love easy money, and and why shouldn't they? They're making a fortune out of it. Imagine the bonuses that these chaps are going to be paid in December.
Goldman Sachs have paid. They've said they're record bonuses this year. They've set aside. Rich get richer, Lindsay.
Please, it's too depressing. Nick Kunzer is from Sun and Private Wealth, and that was the 5 o'clock shadow. Nick will be back with me and David Shapiro on the same show, same time tomorrow evening. The views and opinions expressed in these podcasts are those of Lindsay Williams and various contributors, and do not reflect the policy, position, or opinion of any other agency, organisation, employer, or company associated with strictlybusinesspodcast.com. Assumptions made on the analyses are not reflective of the position of any other entity other than the speaker or the author. And since we are critically thinking human beings, these views are always subject to change, revision, and rethinking at any time. Please do not hold us to them in perpetuity.